Anastasia, I was surprised by the market reaction yesterday. First, a sell-off and then a huge run-up. What did the market see that it was so enthusiastic about when you've got a very hawkish Fed chief saying, we are going to raise and we are going to make sure we get a handle on inflation?
Yeah, Becky, I think there's two or three things going on here. What the Fed did was critical. The first thing is they gave a market the path to look forward to. Prior to this meeting, we really did not know whether it's going to be every meeting, every other meeting, how many rate hikes we should actually pencil in. So the fact that they flat out told us that here's one for March and the total for this year is likely to be 7, that really gave market a degree of certainty. And by the way, yes, it was hawkish, but it was not a hawkish surprise because the markets were already pricing in about that much. The other thing that I really think that moved the markets, especially during the Powell press conference, is this pushback on the recession fears. That's what the markets really started to worry about. But Fed Chair Powell was really quite forceful in pushing back on that, saying the economy can withstand it. And so that's why I think the markets rallied. And then the third thing is this optionality. We say it's going to be 7 rate hikes this year, but if we do have risks that we have to recalibrate for, they will adjust accordingly. So I think that's what the markets heard. And this is why near term, it seems like we put a pause on the recession fears. The markets could sigh a sigh of relief here. They potentially can build on the rally here. But I would also point out to investors that if we look into 2023, if they do deliver 11 rate hikes, we're going to be looking at a Fed funds rate at 2.75% over and above the neutral rate of Fed funds rate and over and above the long run rate for them. So we might be into tightening territory. So we might have put a pause on the recession risks, but I think that's something we need to be watching quite closely into next year.
I guess it is like the closest you're going to get to Goldilocks at this moment. And they did manage to pull that off yesterday. Vince, I'll ask you, what are your expectations of a recession? Have they gone up in recent weeks because of what we've seen in Ukraine and what we've seen with oil prices and what we've seen with other commodity prices like wheat and palladium and nickel? Do you have more concerns that a recession has become more likely?
First of all, it's usually Goldilocks in the forecast. It's harder to get that in reality. And when you think about it, there's a number of major recession indicators that are flaring. We had a big run up in oil prices. We have a flattening in the yield curve. We have the Federal Reserve on move. There's only been one policy firming in the modern era that hasn't been associated with recession. And we don't have a whole lot of spare capacity. Typically, when the economy is working at or above its full employment, a recession is around the corner. So yes, I think recession risks are elevated, probably on the order of 1/3 to 40% over the coming into next year. And I think that it will be a hard row for Chair Powell to hoe, because later in the year, financial conditions will tighten, the economy will be slowing, inflation will be off its peaks. He's going to have some colleagues who say, are you sure you really want to keep on going?
Yeah, I mean, that was my question. Jay Powell has to know this. Is he not saying this right now because he doesn't want to spook the market?
I think part of it is you don't talk about your future colleagues, but he is going to have 4 or probably 5 new colleagues. So when you look at the dot plot, remember that there are going to be 4 or 5 dots by the end of this year that come from people who are more dovish than the median member of the FOMC. A part of it is they don't want to spook the markets. That's why they go gradually. Right. If the economy can bear it, then they can add a couple more quarter points to it. If the economy begins to roll over, they stop sooner than they previously announced. Gradual is a way to essentially litigate different market views.